Welcome to Agreement Foundations. My name is Charlie Lawrence and I am an education consultant, and today I'm joined by
D. Dickerson. I'm also an education consultant.
And we're very excited to go and dive into the foundation of agreements. We want to make sure that we're laying out that groundwork and we're going to be able to start building those agreements up and getting all those service offerings into ConnectWise Manage so that your clients are serviced properly.
Absolutely.
Let's go ahead and take a look at our agenda for today. As we mentioned, this is going to be an agreement foundation session, so we're really going to start talking about those building blocks that are going to make up that entire agreement. So first and foremost, we're going to be talking about what an agreement actually is, those contracts in ConnectWise Manage. We're also going to explore some types of agreements, so we're going to talk about some of those common types of agreements that you might have heard of and many that you already might be using, and we'll actually go through and build a very basic agreement out throughout this webinar. Also going to be talking about applying and customizing agreements. So you may have standard service offerings, but as we all know that it's always an evolving thing. You're working with different clients who have many different needs, so we want to make sure that we do talk about that ability to actually customize, tailor those agreements to make sure that it works for each and every one of those service offerings. And we always want to make sure that we're managing and monitoring all of those agreements. It's great if we've got them created, we've got them customized, and we've got them applied, but we've got to have some insight into the profitability and ultimately where those agreements are being applied. So we'll definitely discuss some ideas about managing and ultimately monitoring some of those agreements by leveraging those tools already built into ConnectWise Manage. All right, so without further ado, let's go ahead and talk about what is an agreement.
Jump right in. All right, so first thing, let's talk about what is an agreement. And that agreement in ConnectWise Manage is going to represent your contract with the customer. So after you've decided on the service offerings and agreed to them with your customer, you can enter in that agreement to reflect it in Manage. And now that's going to be important because that shows that work cover. It shows that agreement between your customers. So people that may not have been involved in that contract, may not be looking at it every day, they can see this agreement in Manage if you choose to allow them to in their security role. Now, that agreement will show that work covered, as we mentioned, but also the assets as well. So any configurations that may be tied to it, any rates that may be special to that specific agreement. And if you want to provide a discount for signing up for a specific agreement, you can do that with your agreements in Manage. And then finally, the SLA can be set on the agreement level. And a lot of times we see agreements that are based on the SLA solely. So you may want to create different levels of service offering. Maybe allow them to have more time or a more aggressive SLA for a higher price. Really? So you can kind of add in a little bit more pricing, create a catalog for your sales team to look at through your agreement types, all through agreements, and manage them through Manage.
Absolutely. Those agreements really are just going to be those contracts with the clients. There's so many items, as Dee mentioned, being able to cover work, being able to provide those client-specific service level agreements. Right. All these can be built right into those contracts in ConnectWise Manage. So when you're starting to expand those service offerings, right, you can build them right in and make those customizations as needed.
Right. So we'll look here at a couple of the benefits. We talked a little bit about them, but the tracking the profitability, we can see what agreement types are going to be most profitable and make our business decisions based off of that. So maybe you have your different agreement types. You can see in your financial dashboard that a specific type isn't providing that much money. Or maybe you're spending too much time working on a specific type of agreement. If you have those set up in Manage, then you can see that profitability and see what works best for your team. Additionally, that will automate your invoicing process. So instead of having all of those standard invoices, sending them out at different times to your different customers, it kind of makes that a defined process. So you can do your invoicing at one time. It's more predictable. You know how much you should be billing for those users and kind of automate that process as well. And then finally, you can manage those SLAs as we mentioned a little bit more. And allows you to set a specific SLA for that agreement on your tickets. Like we said, make it more aggressive or less aggressive if needed. And you kind of can predict the amount of time that you need from your resources to work those types of tickets.
Absolutely. And all those benefits really just lead into the streamlining of all your efforts in ConnectWise Manage. If you're able to spend less time creating invoices, see what is actually the most profitable for your company, and offer all those service level agreements based on those specific agreements that you're selling out to those clients, that's going to save your team time, remove some of those room for error, and ultimately just allow you to focus more on growing your business rather than just spending all that time managing those contracts.
All right. And maybe a key element for you to scale is if you can determine that profitability, see what works best, and so you're not wasting those resources of time.
Absolutely.
as we mentioned with the SLA, there is a hierarchy for it, and as you can see here, the most granular level is going to be on the configuration level, so you can set that configuration for a specific agreement. As you can see here, we can set that SLA on the agreement as well, and that will override that default SLA that you will set in the SLA setup table, and that will be used for any ticket or any item where the agreement is selected on that.
All right, absolutely. So now that we've kind of taken a look, we've understand that these agreements are really just those contracts in ConnectWise Manage. We've seen some of the benefits, as Dee mentioned, being able to track profitability, getting that insight into those revenue streams for your organization, and really being able to laser in and focus on those types of service offerings that are generating all that money, also being able to automatically have those invoices generated and being able to provide SLAs based on specific client needs. Kind of want to dive into agreement types. So what is an agreement type? Agreement types are really going to be thought of as those templates for agreements. Essentially, you're going to go in, and when you start to map out these service offerings, you've got a great idea. Perhaps they might be in something like an Excel spreadsheet if you're just getting into something like ConnectWise Manage agreements. These templates are going to now allow you to be applied out to those companies. These templates are very, very important. That's what these agreement types essentially are. And as I mentioned, they're going to be used to standardize those service offerings. It's probably very difficult if you are managing multiple service offering levels if they're very different each time. The salesperson, even when they're just reaching out to the client, that first touch isn't entirely aware of those standard offerings. But once you start to utilize those agreement types, build out those standard templates, that service delivery is going to be much easier. Your salesperson knows exactly what they're selling. When that agreement is applied, your team members know exactly what they're going to be working on, and really it's going to save your team time by having all those standard service offerings contained right within those agreement types. And with that being said, even though they are standardized, there's still going to be all sorts of room for customizations right inside those agreements. You may want to have a special rate for a specific type of work, maybe an after-hours discount. While that might not necessarily be something you want to fully cover with your agreement, you still have that ability of being able to customize. That foundation is laid, then you can start putting those blocks on it that's going to start to build out that entire box of your agreement. Being able to do things like those aggressive SLAs. All of these can be customized around some of those standard service offerings.
Absolutely. And as we talked about, that agreement is going to contain a lot of information. And because of that, there are a lot of settings that you will have to configure on your agreements. And this is just going to save you a lot of time. If you can go ahead and set up your agreement types accurately, initially, now you can apply those and customize them with only making a few changes to make them work as you would like them to.
Absolutely. Standard service offerings, customization, happy clients, right?
Absolutely.
All right, so let's go ahead and dive into some of those common agreement types. So some of these you're probably very familiar with. You might already be utilizing them in some fashion, but definitely want to dive into some of the common agreement types that we see used in ConnectWise Manage. One is going to be that block time agreement. Typically, the client is going to say, hey, look, we'd like to purchase upfront 30 hours of your time. This may be allocated per week, per month, perhaps even per quarter, or just a one-time agreement. If you want to sort of work those clients in, say, hey, look, we're going to give you 30 hours of work for this lump sum of money. Let us show you our value. This might be that great agreement to sort of hook them in, and then once they start to see what you can do, they can start to see all these backups you can do, all this device management you can do. This is a great place to really get them lured in there. And then springboard right into managed services, right? Now we're starting to manage these networks, manage these services, these workstations, backups, help desk, AV equipment, everything here, all these managed services, another very common agreement type. And this will be a great place to start using those additions that we'll talk about a little bit more. And then hosting kind of goes hand in hand right there with those managed services, pulling in emails, web, server, applications. All these, again, can be something that generates recurring revenue. Starting out with that block time, springboarding into something like hosting, you're going to start to see those revenue streams consistently flowing into the system. This is another great place to utilize those agreement types. And then also professional services. So if you do offer anything like consulting, working on specific reports, these are great places to start to put in these professional services. And while those may be something that you do charge at a higher rate, this is a great place to build in some of those custom rates that we're actually going to talk about, and we've mentioned a couple times here. You can say, look, you can purchase this agreement. We're willing to work with you. We're still going to charge a little bit, but with this agreement, you're going to get something like a 10-15% discount per hour, and we'll even throw in some managed services there. So professional services, again, another type that we see relatively often. Equipment rental, something I'm sure many of you can relate to. If you're managing any type of equipment you're handing out, laptops, servers, again, AV equipment, studio equipment, this can be literally anything that you're lending out to that client that you still want to keep an eye on and still be able to bill very consistently. It may not be as efficient to create a service ticket every month, add that product on, have that flow through the standard invoicing. Then you're wondering, am I tracking the cost effectively? Am I billing it effectively? Have I gotten double billed? Put those all on as additions onto that agreement, flows right in the invoicing, and then you have an insight and an accurate record of how long this equipment's been out there. Also, those maintenance windows. If you're doing any sort of maintenance for your clients, this is, again, probably something that you've done before. May not be an agreement type yet in the system, but this is a great way to combine those hardware, combine those software licenses, and just combine all those daily maintenance, weekly maintenance checkups that you might be doing. All those should be combined right there into the agreement. You can build through those additions, set aside a certain amount of hours if necessary. All this, again, right there in that maintenance agreement. Also, those software assurance, installing, protecting, and training as well. Training is definitely something you can include in those agreements. That additions tab is essentially limitless. If you have a service class product that you utilize for training, put it on that software assurance. This is a great way to make sure all that is consistently billed there. And then ultimately, something that we're now seeing more and more are those user care agreements. When you started to kind of springboard past some of these items and you start to know, look, per user, this is the amount of money we can have. We're going to manage it, all those items like software, training, all this is going to be built in on that per user care. And again, this is a great place to utilize those additions and make sure that you're tracking all that profitability. All right, so now with that being said, let's actually go through and set up one of these agreement types. Since this is an agreement foundation here, this is going to be a relatively basic agreement. We're going to kind of focus on those lump sum of hours there that we talked about, that block time agreement. Right. This is going to have 20 hours available per month, and we're going to go ahead and say we're going to bill it at $5,000. We're also going to allow them to carry over some of their unused hours. So this capability actually says, look, we're going to give you 20 hours a month. If you don't utilize some of those 20 hours, we'll allow you to carry over some of them so you can really, really see the value of that agreement. Especially useful if they're signing on for that short term. You want to keep them around. Start to kind of allow yourself and allow your team to prove your worth to those clients. Right. And in this case, this is going to be a very basic agreement as we mentioned. So we're only going to allow this agreement to cover work that is done remotely, nothing on site. And it's going to be our help desk work. Our consultants may not necessarily be involved in this. But again, with that being said, you could still build in custom rates. We won't do it in this example just to keep it very basic here. Also, these hours are going to be limited just to our office hours. We don't want to include anything after hours, as that may be something that's probably going to need to be billed at a higher rate, probably our more specialized team members. And again, after hours, you're definitely going to most likely have to pay a little bit extra for your team to work those as well. And we're just going to go ahead and bill this on a monthly basis. So 20 hours a month at $5,000 billed every single month. So let's go ahead and actually see what the setup for this type of agreement might look like. In this case, we'll navigate right there to that system module, select that setup table screen, and once you arrive at that setup table, you'll go ahead and search for that agreement type. And once you get there, you'll go ahead and drill right into that agreement type setup table, and then choose to actually just go ahead and click that new item icon right there at the top. And that is now going to bring you to the agreement type screen here. So as we mentioned, this isn't actually going to be an agreement that's built for a client. This is the template. This is going to be the backbone of those agreements that you're actually going to apply and start working through with your team and with your clients. So it's very important when you are working through this to know that this isn't going to kick off any billing. This isn't going to kick off any hours being applied. This is simply just going to be the template for that agreement as you're working through that process. So first and foremost, definitely want to make sure that agreement name is going to reflect the agreement type name. Now, what we mean by that is make sure that this agreement type name makes sense. Yeah. When your finance team member and ultimately some of your service technicians might be looking at these agreement names, it's much easier to say, look, this is our block time than it is to say BLK, TIM. Sometimes we've seen some of those acronyms do cause a little bit of confusion. So very easy, just make sure that name makes sense to everybody there in the organization.
Yes, and once again, this is reflecting your service offering. So you want your sales team to be able to see that agreement type and understand what service offering that is. And the same thing with the reporting as well. When you're looking at those reports, you want to easily be able to understand what we're reporting on.
Absolutely. As Dee mentioned again, very, very important for the salesperson to know exactly what they're selling, right?
Absolutely.
And then also, Dee brought this up as well. Having that agreement SLA being able to override the global default SLA. This is very important, especially when you're leveraging those negotiations. This is where you can really start to customize and tailor some of your service offerings. If your basic default agreement for some of your break fix items, if it might just be a one-off client emailing in saying, look, we'll get to it in 3 to 4 hours, this might be that chance to say, hey, listen, if you sign on to this contract, we're going to guarantee a 1 hour response time during business hours. Great place to really leverage some of the abilities of your team. And then we're going to take a look here at the application parameters. This really is kind of the meat and potatoes, if you will, of that agreement. This is where you're going to actually define what this agreement covers and how it allocates here. In this case, you have the amount-based agreement. So this is saying, if, hey, we'll collect a $5,000 down payment, and we're just going to give you $5,000 of work no matter what it looks like. We don't see those as often, but that's certainly a great idea. In that case, you'd probably just want to make sure that you do limit the types of work you're covering, so you're not giving them a ton of consulting hours sort of at that lump sum of hours.
Right.
In this case, we are going to focus on that application unit of hours. This is going to be 20 hours of our team time, and as you can see here, this is going to be available per calendar month. That means every single month, this agreement is going to allocate whoever has applied this agreement to 20 hours of work there. And again, we're also going to allow them to carry over some of those unused hours. This is something that is optional, again, if you don't want to encourage them to kind of save up all their hours, right, and then at the end they've got 100 hours to spend. Maybe not be something you want to build into that agreement type. But again, this is very customizable. If you want this as your standard service offering, maybe change it up for some of your newer clients. You're not really sure how that relationship's going to kind of bill out there. You can definitely fix that up as needed.
It's a normal starting point to carry over those unused hours, just in case maybe once you're first starting, don't really know if the customer is concerned if they're going to use all of their hours. You can tell them that you don't have to worry about that. We can carry over those hours and just kind of get an idea of what they were really using to make your agreements more effective.
Absolutely. Leverage that beginning of that relationship, right? Building on them by saying, look, even if you don't use these hours,
right,
we're still going to give them to you.
Exactly.
So that's going to really build that initial trust in that agreement type, standardizing those service offerings.
Exactly.
All right. So next up, as we mentioned in those parameters here, you want to limit the coverage of your agreement. As you can see currently, we have all work roles and work types covered.
Yeah.
So what that means is no matter what time entry has this agreement type applied to it, it's going to cover those entries. If your sales team is only promised remote help desk work and you're giving them these lump sum of hours for probably a discounted rate, you definitely want to make sure that you're monitoring exactly what this agreement is going to cover, or else you may end up giving away time that you did not intend to.
Right.
And the way that this coverage is going to work here is really that both the work role and the work type has to be covered by this agreement in order for those time entries to apply against that agreement. In this case, we want to make sure that just our help desk work role and our remote support work type is covered. What this means is in order for a time entry to go against those 20 hours that we've allocated here, the work role has to be help desk, the remote support has to be the work type. This is what's going to pull it from that agreement lump sum there. And just coming from support, Dee and I both spent some time with our support team. We often see this as kind of where some of those coverage mishaps come from, right?
Absolutely.
We haven't set the agreement up to cover the correct or intended work role and work type. The time entry gets applied against the agreement. It wasn't supposed to cover that, so it doesn't cover it, and then it flows through to the invoicing. So it's just absolutely essential when you're standardizing these service offerings, identify the work role, identify the work type, and ensure that that coverage is limited properly.
Right.
All right, so next up, really want to go ahead and take a look at some of the billing and invoicing information. As we mentioned this time, we want to make sure our billing cycle is going to be monthly. This allows for those recurring invoices to appear in the agreement invoicing screen, going back to the automating invoicing that we talked about a little bit earlier. And we're also going to enter our billing amount here. Now, this is one of the ways to bill an agreement, though we do typically recommend billing through additions, and we'll get a little bit deeper into the benefits of billing through additions rather than this flat billing amount here.
Right.
This flat billing amount is just going to say, hey, look, every month you get your 20 hours, and that bill for the $5,000 will be generated. You can also say, we don't want a billing amount here, we'll put it at $0, have all the billing go through the additions, but for this purpose, since we are going through a more basic agreement, we're going to put it in that billing amount field there. All right, so as I mentioned here, you also have the ability to define the terms there. So if you do have a newer client, maybe you want to only give them a net 30 days, say, hey, look, we need those payments remitted in 30 days, just building that trust and that relationship. And again, as you start to tailor and improve your service offerings, maybe give some extra time to some of those clients. You know they're going to remit the payment, maybe 30, 60 days. But again, this is going to give you a little bit more control over when you expect those payments coming back in.
Absolutely.
All right. And one of my favorite pro tips is defaulting agreements onto tickets. This is a question that we're often asked. How do I get my technicians to add agreements onto tickets? We've signed all these clients on, but my technicians can never remember to get agreements on tickets. And we could probably understand that, right? They're there, they're crushing these tickets, they're working, they're making phone calls, they're making visits on site. Agreements on tickets might not be the first thing in their mind. They may not deal with the invoicing process, they don't deal with the billing process, maybe not necessarily understanding all the contract kind of intimacies there, right? So what you can really do is just go ahead and apply those agreements by default. When this ticket flows into the specific service board, the specific location, the agreement attaches automatically, so those clients don't have to click through those drop downs, make those adjustments. It's already right there on that ticket.
In automating this process, we want to default as much as possible, whether it be those work roles and work types, or the defaulting of the agreement onto the ticket. We want to set this up correct initially so we don't have to worry about our team updating these items. We want to automate those processes and get that out of their worries.
Absolutely. And this is really going to not only benefit the service technician, the service manager not having to worry about the agreements, but your billing team is going to be very thankful, right?
Absolutely.
None of those mistaken time entries are going to flow through to standard invoicing. You print out that invoice, it's now sent out to the client. It already should have unfortunately been covered by the agreement. That should alleviate all those issues.
Right.
Just having that default right there onto the ticket, no weird time entries are making it through to somewhere they shouldn't be. We always advise, if possible, go ahead and default those agreements right onto the tickets.
Absolutely.
All right. So now we've got some of those agreement types generated. We've seen what an agreement is. Let's go ahead and talk about customizing and applying it.
Absolutely. So we've already created that agreement type. If you notice on there was a default where you can set that default agreement type, and that's what's going to appear when you first create that agreement. So there are a couple different options, ways to create the agreement. The first way is from that Today screen, you can use the quick add button, and you see that there is an agreement option there. So selecting that agreement option, we'll go ahead and create that agreement, but there won't be, it will only have that default type there. So it won't be a company listed, but there is another option there. So you can create the agreement from the company itself. So from company, you go to the agreement tab, and hitting the new item icon will go ahead and populate that company information for you. As you can see in that bottom screenshot, it also will select that default contact as well. And so that will go ahead and populate a little bit more of your information. If you're entering in a bunch of your agreements that you already have contracted, this may be an option that will just save you a couple of steps in selecting the company contact and filling out that information.
Absolutely. Probably the most common way we see it is right from that agreements tab of that company, because that is going to pull in all that information. The quick add, again, great way to make some of those agreements, but oftentimes the most streamlined, most efficient, and probably most precise way to do it is right there from that agreements tab on the company record.
And once again, you don't have to worry about any manual errors. That will go ahead and pull that information directly in there.
Right. Absolutely.
So once you have created that new agreement, really applying the agreement really means selecting the company. So going from the company, the agreement tab of the company, that's already done. But we will need to make sure that we select a name for that agreement. So we selected a name for the agreement type, but this will be the name for this specific agreement for the company. Once again, we want this to be a descriptive name, something that's easy to understand and identify for that customer.
Absolutely.
We'll also need to update that start and end date for the agreement. So this, once again, will be pulled from the template, but we need to update that start and end date for this specific agreement and update the rest of the items. So the types and the information that we set in the agreement type setup table will be pulled over. But if we have specific client needs, like maybe we want to carry over unused, that may not be part of our normal process, but we can enter in those items directly from that new agreement.
Absolutely.
So as we can see here, we also need to update that billing start date. That will be different from the actual start date of the agreement, because that's when we will like to actually start billing for it and actually have an invoice for that agreement. We'll also need to update the tax code for that specific agreement, what that will be pulled from the company, but you can change that as the other settings are available on the screen.
Absolutely, and that billing start date, as Dee mentioned, is absolutely essential. That's a question, again, we're often asked is, where are my agreement invoices and why are they not generating yet?
Right.
Oftentimes it's right there on that billing start date, so if you are seeing any issues with those agreement invoices updating or flowing through to that agreement invoicing automatically, definitely go ahead and take a look at that billing start date. It's absolutely essential to make sure that that billing start date accurately reflects when you want to bill the client, not only for your team, but just to make sure that those invoices are getting to the client in a timely fashion.
Absolutely. Oh, we'll look at a couple other settings here. We have that work role and work types tab, And this is where you can customize those special rates that are specific to the agreement. So in this example, we'll see that we have a work role set up where we're basically providing a 10% discount. So we have the multiplier rate type, and that's just going to multiply all of those rates by that 0.90, so 90% of what we would normally charge. And this can be set up with that effective date and end date, so when we want to start it, and this will just provide that custom rate directly on the agreement, and it's visible to our teams to see where that rate is coming from.
Absolutely, and setting custom rates is actually a great way to sweeten the pot when you're starting to go into those negotiations. Yeah. You can actually start this agreement out, build in some of these custom rates that don't actually kick into maybe the third or fourth month. Yeah. So now that they've kind of worked with you, they've allocated some of those hours, 20 hours a month, on the third month we're going to say, hey look, now we're going to still give you this 10% discount. So this again is going to be a great way to provide some additional discounted hours. You can also limit the amount of discounted hours. So this is a great way if you do have any kind of consultant or professional services, we'll say, listen, we're going to give you these 20 hours remote support. That's going to cover all those items. We're also going to build in 10 hours of a 10% discount for our consulting services. So not only is this agreement encouraging them to stick with your team, now they're spending a little bit extra because of that discount, kind of sweeten the pot, if you will, right?
And it provides another incentive for that amount-based agreement that we have created in the last couple of slides. And so maybe you provide that as an incentive. If you go ahead and pay this amount for this block of hours, then we can give you the discount that'll be a little bit cheaper than you would normally pay for these services.
Absolutely.
And that have those fields highlighted there. So as Charlie mentioned a little bit further, we can set up the billing amount to bill for that agreement, but we can also bill through additions, and that will be the best way, and that's the way that we suggest that you bill for those agreements. It just allows you to get a little bit more information, especially on the cost for it. So through additions, we would be using products, and we can set the costs in those individual products. And so we can get a little bit more information on the profitability of these agreements. So factoring in the actual cost there. As we mentioned a little bit more, we have a detailed invoice. Since we have a specific line item for all of these products, they can be listed out on the invoice with a little bit more information. So the client sees what they're receiving, and regardless of maybe whether that's billable or not, they can just see that you're doing that work. This is what I'm getting for my money. This works out a little bit better. Once again, using those products allows you to split out the revenue in your GL accounts for that agreement. It's kind of to go into QuickBooks or your accounting package, it can go into those different revenue streams based on the product that you have added there. Additionally, you can use, if you have an RMM tool, something like Automate, you can update those machine counts and those usage statistics directly on your additions tab. Once again, automating some of those processes for your agreements. And then finally, it creates a historical record of the changes made. So we'll see here shortly that you can cancel those additions and create a new one. You kind of can see directly on that additions tab what's included and what has occurred with this specific agreement.
Absolutely, and you'll notice probably through all those additions, benefits that Dee mentioned there, really what all these benefits are really playing down to is it's going to give you a lot more detail into the visibility of your agreement, right? If you're just billing through that flat billing amount, that's great. You're still going to get those invoices sent out. You're still going to get those revenue streams coming in. But when you start breaking it out and really taking a look at the cost, those detailed invoice line items, those historical records of those changes made, this is really going to give you true insight into those service offerings. And once you start to identify with those service offerings, identify the benefits, that's when you can start to scale those outwards and really work towards those different agreement types.
All right, absolutely. All right, we'll go ahead and take a look at that additions tabs and a few of the fields that are available there. So the first thing is going to be that additions tab. That's where you're going to create those additions. You can use that new item icon to add another one. So there's only one addition listed here, but you can add those multiple additions to create those additional line items there. There is a bill customer option, so those additions may not need to be billable. You can have a no charge addition just to show on the invoice that this is something that we're providing. I think that's important just to show your customers exactly what they're getting for their money.
Showing some value, even if it might not be something necessarily that you're going to bill them for, hey, look, here's a line item of a service that we're providing. We built into this contract. It's still something that you can manage through that agreement, get some insight, and maybe if it's still costing you money, perhaps even if it's only $5 a month, it's important to record all that right there in that addition, even if you're not going to be billing it out.
Absolutely. We also see that once you select that product, it's pulled from your product catalog, kind of like the agreement type. It works kind of like a template. It'll populate a lot of that information, but that is editable. So you can go in, you can change those quantities, you can change the cost, you can change those price fields. As you see here, the unit price and cost will be pulled from that product catalog, but you can go ahead and update those for those specific needs.
Absolutely. So if you do have a flat rate in your product catalog for something that's a relatively standardized price normally, but we're going to send it out to the client perhaps at a more expensive rate or even a cheaper rate, this is a great place to control that product cost without having to really mess with your product catalog specifically. Right. Going in, making specific items for your clients, which may end up clogging things up. You can really just go in there, edit it, and make it important for that very specific agreement there.
Absolutely. And as we mentioned, that effective date and cancel date is listed there, so we can start that addition and cancel it when we need to. And that's going to be listed there on that addition, so we can kind of have that historical record of what has occurred under this contract.
Absolutely. So if you may have a piece of rental equipment that might only be viable for perhaps the first 2 months of that agreement life cycle, it's not always the easiest thing, right, to remember right off the bat that, hey, look, in 2 months we got to remember that this edition is expiring. Go ahead and build that right into the edition when you're adding it onto the agreement. We'll say when we hit this date, this is now going to be kind of pushed off to the side. But when we're looking back at that agreement, we still have that audited record of that specific item that we may have rented out there in that case.
Absolutely. And then we also have that product invoice description, and that will just allow you to put in some more information that can appear on your invoice. As we talked about those more detailed invoices, you can enter in those details here just to provide some more information on exactly what they're receiving.
Absolutely. And we also do have that ability to provide a little bit more detail on those invoices. As Dee mentioned, always important to make sure your clients see all the value of that agreement. These additions are going to really allow you to break out that exact amount that they're spending. If you're always frequently getting phone calls saying, look, I'm just not seeing the value in the agreement, I know I'm paying you $5,000, I'm just not sure what I'm getting, you may want to switch over and take a look at some of those additions. This is a great place to really give your clients direct insight into the value of that specific agreement. All right, so now that we've really taken a look at creating some of those agreement types, we understand what those contracts are. The next and possibly one of the most important parts of an agreement is making sure that we're managing it effectively and that we're monitoring it effectively. So we'll go ahead and stop by with Jennifer, our finance manager. She needs to be able to proactively manage those agreements and see what agreements are actually granting the most profitability. We know these contracts need to not only provide value for the client, they need to provide value for our company as well. And if we don't have that direct insight into the cost, we're not really sure what profitability we're getting, we're not sure what types of agreements are effectively bringing in those revenue streams, we're not really managing those effectively.
Right.
We've got to be able to monitor those right up front there. So one of my favorite places, and I think many of you have maybe perhaps seen the screen already, is the financial dashboard. Now what's really exciting about the financial dashboard is it's kind of a live, quick snapshot. Now with that being said, this isn't the end-all be-all report. This isn't going to give you that definitive answer every single time, but this is a great place to go and take a look at relatively frequently, maybe a few times a week, and really see what agreements are bringing in that revenue. So you'll be able to see here, look, our user care agreement is building us a 92% gross margin, which is great. But if we see something that's too high, we may want to say, are our costs too high for our clients? Are we still getting value out of these agreements? And this is also going to perhaps allow you, when you're rolling out all these service offerings, to scale them back down to which ones are the most important. If you have 5 agreement types and you're finding that one agreement type is far more profitable, it's giving your team more money, and it's getting your clients more value, that might be the agreement type that you want to keep focusing on. But the financial dashboard is just going to give you that high-level overview and allow you to see which agreement types are really generating it.
Absolutely.
And another great report is the agreement reconciliation report. A question we're often asked is, where are our hours going? I know I've paid you for 20 hours, and now I only have 5, but I'm not sure exactly where all those hours applied. Did they allocate correctly? Well, the great news is you can go right into one of those agreements you've applied for a company and actually take a look and see that running total of all of those hours. So in this case, you'll just go ahead and select that printing the reconciliation report here. You'll then be able to choose the parameters. So if you're only interested in seeing how this agreement is allocated hours perhaps over the last month or two, you can adjust those start and end dates, or if you want to see the entire life cycle of that agreement, you can push that out right to the beginning of that agreement. Once you choose to print that, you'll see a very easy to read report pop up right there. So we can see in this case, we've got our 20 hours, if you remember from that block time agreement that we set up a little bit earlier. We've allocated 7.5 hours here, and then another 8.25 hours there, bringing our balance down to 4 hours. So if you are getting those questions from your clients saying, hey, I'm just not sure where my hours are going, this is a great report not only for you to run, but also to send out to them. Saying, look, here's a reconciliation report, here's how it's all worked. This is a great way from the financial portion, from internally, being able to audit these agreements, ensure that all the hours that are being taken away should have been. It also allows you to catch those time entries that perhaps applied mistakenly, and allows you to go back, review some of those work roles and work types you have covered. But this is going to provide great value and some transparency to your clients as well. Here's where your hours are being spent, and then you can start to identify if you need to tailor that agreement in a little bit of a different fashion. And another pro tip, we added this I think about sometime last year, and we know this was a very popular one, not only with us, but with all of our partners. Everyone seemed to enjoy this particular enhancement. This is the app hours info column. So you'll notice right there's that lowercase I, and by clicking that, you're actually going to be able to see why a specific time entry either did or did not pull hours from that agreement. Why did this agreement cover this time entry, or why didn't it cover this time entry? You'll see it broken out for all the different reasons. Is the location covered? Do we have the correct work role selected? Is the correct work type selected? All these are going to be available right there with that applied hours information column. So I would highly recommend, if you're ever seeing a particular issue with an agreement, navigate over to the time tab of that agreement, select that little lowercase I. That little flyout should tell you exactly why or why not a time entry was covered by an agreement.
Right. And these two features work very well together. So you can run that agreement recon report and see that maybe there's a time entry that you were expecting to deduct from those hours that isn't.
Right.
And you can go directly into that time tab, hit that information icon, and see exactly the reason why.
Absolutely, that is very true. If you do see any of those time entries come in, you're not sure why, navigate to that time tab and you should get that all cleared up very quickly there. And one of our favorite workflow rules to monitor agreement anniversaries and expirations. If you have more than probably 1 or 2 contracts, remembering when they're expiring, remember when they're coming up for anniversary is not something you want to be doing manually.
No.
Go ahead and just generate a workflow rule. Tell it to look for any agreements with end dates coming up 45 days in the future. This is not only going to allow you to be knowledgeable of these upcoming expiration dates, but it's going to allow your sales team, your finance manager, your service manager to reach out to those clients. Make sure you secure that renewal. You don't have to go out procure any new clients. You're going to keep allowing yourself to be sticky, fostering those accountability loops that we're always talking about. These agreements, this workflow rule is going to save your team so much time, and it's going to allow better relationships with your clients.
Absolutely.
And if that looks like something you may or may not have too much time to build out, we do have some great workflow rules for agreement expiration available in the marketplace. Those are all free and available right there in our system module, and then clicking marketplace. And if you have any fear of importing those workflow rules, they'll be turned off when they arrive in the system, and you can make any tweaks or edits to them to really make them work specifically for your business case there.
Absolutely.
All right, so just some key takeaways from our talk today. One is just capturing those service offerings as agreements. If it is something that you're offering and selling as your client as a contract, make it an agreement in ConnectWise Manage. Creating those templates and customizing your agreements is essential to making sure that you're delivering those service offerings that you've sold and that you're tailoring to those specific client needs. And leverage those customized agreements for profitability. If you're starting to see some of your agreements are bringing in a lot more revenue than others, perhaps it's time to start transitioning. Maybe you start to slowly phase out some of those old service offerings, bring in those ones that you're seeing on the financial dashboard, and have those revenue streams continue. And for last, but certainly not least, make sure you're managing those agreements effectively and you're monitoring things through the dashboard, through some of those reports, the app hours info column. Make sure that once you set those agreements, you don't forget about them. There's still some automated monitoring there, and also some monitoring through those great reports there.
So our first question is coming from Victor. And Victor asks, my existing time entries do not reflect the custom rate change, even though the effective date comes before the time entry date. How can I ensure my custom rate change is reflected properly? Now, the issue that Victor is seeing here is something that we see often when we enter in a custom rate and set and backdate that effective date. And so what happens is the time entries that were entered after that, even though they were entered after that effective date, they're not updated yet because they were already entered. So let's take a look at what we can do to update those rates. So as you can see here, we kind of replicated that situation where we added a work type on the work type tab of the agreement, and we've set that to all for the location and work type, so it covers all of those work types, and it basically will override that rate. Once we've done that, we set that rate to $100, so our rate for all of our work roles, work types will result in $100. Additionally, that effective date is set to 3/1, March 1st, and so that's when we want this rate change to take effect. So once we go to that time tab of the agreement, we can see that we have 2 time entries listed here. The date is set to 3/7 and 3/6, so that our change should affect these time entries. And that rate that we're seeing for them currently is 120 and 160, so therefore it hasn't been updated as of this time. But there's no problem. We can easily update those rates by selecting the time entries that we would like to update. We can use that checkbox at the top to select all, or we can select the individual time entries. Once we do that, we can select that update rates and allocations checkbox right underneath that header, and that will go ahead and update those rates. So once we've selected that checkbox, we can see that the rate has updated to $100 instead of that 120 and 160 that we were seeing before, and everything is now up to date.
Absolutely. And really some of the logic behind that functionality, if you're taking a look at that there, is that at that time that was the correct rate, right? Even though we have set up this to kind of backdate retroactively, we still want to make sure that before we go back and change some of those records, especially since they are tied to your company's finances, that update rates and allocations is kind of giving that program permission to sort of update those items. And also this is a great way too if you did kind of give your clients some way to sweeten the pot there, right? If they're signing on for a new deal, we're going to say, hey, look, we're going to go back and adjust some of those rates, give you a couple discounts for that previous week since you've signed on for this extended agreement. This is also an excellent way as well. You've adjusted that rate down to $100, and all you'll need to do is just go back and update that rates and allocations. It is something that we see pretty frequently, so definitely something you definitely want to take note of in case you do run into that in the future there.
Absolutely.
All right, so our next question is, what is the best way to inform my team of the differences between what is covered on a client's agreement? And this was submitted by Greg. So this is a question that kind of has a couple answers there, right? Probably the easiest answer is just giving your members access to those agreements. In this case, your members will have inquiry level access to those agreements. Now, with that being said, especially for your technicians, you most likely don't want to give them any ability to add, edit, or delete agreements. That should probably be something that is exclusively managed by your finance team or whoever happens to wear your finance hat in your organization. But there certainly is that ability to just give that inquiry level to your members for agreements there. That's going to allow them to just see the agreement there. Another option is kind of consolidating agreements per company. If you have multiple agreements and you're really leaving it up to your technicians to take a look and choose which agreement, that could be a recipe for the wrong agreement being applied to a ticket, the time entry not being covered, it ends up kind of flowing through, the invoice is sent out incorrectly. So it's probably important to start to consolidate some of those agreements. If you find yourself having 5 or 6 agreements per company, you may want to just take a look at some of those processes and see if you can kind of push a couple of those together, maybe reduce it down to 2 or 3, so that way you don't have to give your technicians as much to remember there. Also, defaulting agreements onto tickets. This is really going to help your technicians understand what should and shouldn't be covered, because it's just simply going to default the agreement right onto the ticket for them. You're not going to have to be concerned with picking the correct agreement in accordance to their work roles and work types. It's already going to show up on that ticket. And then that kind of brings me to that next point, is enforcing processes for work roles and work types. Really, regardless of what the agreement is actually covering, what this technician should be focusing on is just selecting that correct work role and work type. If the agreement is already attached to that ticket and it's supposed to be covering the work that the technician is performing, it already will cover it. The technician doesn't really necessarily need to know exactly what's on that agreement to make sure that his or her work role is covered there. In that case, you may run into some situations where they're on site, perhaps selecting remote work that is mistakenly covered. So that is some things that can happen. That's why we always recommend enforcing those processes for work roles and work types and defaulting those agreements on tickets. But certainly if you do want your members to take a look at those agreements, just go ahead and give them the inquire level access and restrict that add, edit, and delete, though that can lead to some of them being able to take a look at rates and stuff, perhaps see how much they're getting paid, how much they're charged per hour.
Right.
So again, that is kind of a double-edged sword there, so probably consolidating agreements, going with that default, and just coaching that correct work role and work type might be the best way to really give them that information. All right.
So we'll jump into that next question from Paul. He says, I keep finding billable time missing an agreement that should cover it. This is causing us headaches when it's time to get the invoices out. Is there any way to catch time entries that should have an agreement selected on them? Now, as Charlie mentioned, we want to default our agreements onto those tickets based on in this our agreement type setup table, and on that agreement we can set those defaults there and want them to be set up properly. But sometimes we do have some time entries that may slip through the cracks, and we can use our workflow rules to find those time entries. So let's take a look at how that workflow rule can be set up. The first thing I would like you to notice is in that table reference field, we have selected the time entries reference. And so even though this is agreement workflow and it's going to affect our agreements, we're going to look for the time entries that are missing that actual agreement. So once we have set up that and our table reference, the location that we want our workflow rule to run on, we can go ahead and add our event. And our event is going to be pretty simple. We're looking for time entries that are one, billable, and then also have no agreement. So time entry is billable and time entry has no agreement. Once we've set up that event, we can set up our action, and we've set that up to send an email, and that email can be sent to that assigned resource, so the person that entered in that time entry, as well as your service manager or controller, your finance person, whoever is going to be reviewing those time entries / agreements. So let's go ahead and take a look at that action. We see here we have the send to set to the assigned resource, and the member for that controller. You can set that to your service manager or controller, whoever you would like to, but we kind of like setting it to that controller. Maybe scare them a little bit, make sure we're enforcing those processes, making sure those time entries are updated as we need them to be. And then finally, we can set up that subject, just letting the resource know what we're emailing them about and telling them that they have a time entry that needs to be updated, doesn't have an agreement.
Absolutely, and really the advantage to this workflow rule, as Dee mentioned, you probably have some agreements set to default, but what this workflow rule can function as is that safety net that's going to catch any of those time entries that might have slipped through the cracks before it gets to invoicing. This is hopefully going to avoid that situation where you mistakenly send out one of those standard invoices. Right. It's not going to be unbatched from your accounting package. You've got to call the client, get that agreement adjusted there. This workflow rule is kind of going to catch all of those items. Now, a question, kind of a follow-up question we're often asked there is, well, I have service boards where we don't have agreements defaulting on. Isn't this workflow rule going to pick up time entries on this board as well? Yes, unless you actually specify the workflow rule to run on a specific board.
Right.
In our example here, we just have it running on our help desk board. If your process is to have all of those tickets that are hitting your help desk board tied to an agreement, this is going to be a perfect safety net for that situation. To make sure that absolutely no time entry should ever not have an agreement on it, you're going to be able to catch all those before they go too far down in that finance process there. So this really is going to be that admin you don't have to pay, one of our items we like to call our workflow rule. This is a great net to catch all those possible mistakes there.
Absolutely. And once that email is sent out, if you're sending that to your assigned resources, or let's say your service manager, either can go into that time entry search screen and make that update. It's kind of easy to filter based off of that billable status and also that agreement field. It'll let you see exactly which time entry is missing that agreement.
Absolutely. All right. And our next question there was from James. So James's case, most of his clients do purchase blocks of hours up front there, and sometimes they run out of hours and want to purchase more. And what is the easiest way to handle this situation? And again, this is a question we are often asked. Many of you probably have agreements that don't allow for overruns, and when those situations where your clients do run out of hours, you want to just make sure that you're adjusting that agreement rather than going through perhaps creating another agreement, billing them outside on a miscellaneous invoice. That process can get a little messy. So what we recommend is the Adjustments tab of the agreement. So in this case, you can navigate right through that finance module, select that agreement screen, drill into one of your agreements if you're following along there, and navigate over to that Adjustments tab. Once you're on that Adjustments tab, you can select that new item icon, and what this is going to allow you to do is actually adjust hours. So in this case, we're going to go ahead and add 5 hours onto this agreement. You'll also notice that there is an effective date. So if you want this to start in the future, this is a great way to kind of give back to your clients or even kind of encourage them to re-sign one of their agreements. Say, if you renew this agreement, your second month of your agreement, we're going to give you an extra 5 hours. So while this adjustment is great for giving them additional time, this is also a great way to even leverage some sales. Putting in an adjustment ahead of time that's going to kick off in that second or third month of that agreement life cycle, that's already going to be built right in there for them, kind of sweetens that pot. Or even in the case where perhaps you do have something that was covered by an agreement, the ticket or request took a little longer than you expected. Maybe it should have been about 2 hours of time, ended up taking 5 hours from that agreement. You can utilize this adjustments tab to give that time back to your client and make sure that they see all the value in that agreement while simultaneously clearing up some of that space for your team, not having to send out some outside invoices there and make any other kind of outside adjustments to the agreement there.
Absolutely. And once that adjustment is added, we can see that reflected in that agreement recap on that agreement tab and additionally on the agreement recon report. So that can also be sent to your client to show them that we did give you an adjustment for that work that we spent a little bit more time than normal on.
Absolutely. Really reinforcing to your client that there's a lot of value in that agreement that they do have with you.
Absolutely.
All right, so that was all the questions we had before the webinar started. So we're going to go ahead and take a look at a few I saw down there in the Q&A pod. So our first question was about providing some guidance on defaulting agreements on tickets when a client has more than one agreement there. So that is a question that we're often asked. What we like to recommend there is that if you do have multiple agreements, they likely don't need to be kind of defaulting on the same service board. You probably have one that's going to deal with specific blocks of hours or if you have chunks of time there. In that case, when you're defaulting the agreement, you do have the choice to choose which service board it's actually going to default on. So if your technicians kind of have that default, hey, this is going to be our block 20 hours, it's going to work on our help desk board, it's just going to cover our remote support, but we also have one that is going to work for a block of consulting hours. In this case, you'd want that second agreement to make sure that it's defaulting on that professional services board you might have. Those are some examples of where we typically kind of coach when that question comes up, making sure that you are getting a little bit more granular with the default of your agreements, especially if you have multiple ones for specific clients there.
Absolutely.
All right. All right, so our next question coming up there was about actually having agreements with some products tied onto it during the creation of that agreement.
So the preferred method is to convert that opportunity into your agreement. And with that opportunity, we can add those products directly on there. And once we convert, that will be added as an addition to our agreement. So that is our preferred method of creating those products and additions onto that agreement for you.
Absolutely, as Dee mentioned, kind of starting that life cycle in the sales module. So you can certainly go ahead and create an agreement, add those products on, and that's something we see very frequently. But if you're pretty concerned about making sure that all the products that you may have talked about during your sales life cycle make it onto that agreement, then definitely starting with the opportunity, converting it over to the agreement, that's going to pull all those products over and still allow you to select those agreement types. So that's typically kind of the flow that we recommend.
Right. Starting
with sales, have that audit of the sales, moving it over to the agreement so everything is kind of in that streamlined process there. All right, so one question was, what is a way to review additions by product ID on agreements in advance of invoicing? So if you do take a look at that additions tab, those product IDs will be there, and definitely ensuring that those products are there properly is probably certainly the way to go before invoicing there. And if you do have those additions set to bill, that will probably be something you want to maybe even monitor with workflow rules, make sure that nothing expires before invoicing goes through as well. All right, let me take a look, see if we've got any more questions there. All right, so then we did have a question about products with different billing cycles there. So we do have products that bill annually and some that do bill monthly there. So what would be a good way to handle that via agreements? So in that case, you may want to even set up a couple agreements there. But nevertheless, what you can do is also have those additions set to expire at a certain time as well. If you just need to bill something annually, what you can do is set it up there. We'll have that bill in that first invoice of the month and then set it to expire there. So in that case, you would just have to go in there and remember to add that on manually at that annual time there. Or if you are using something like Cloud Console, updating some of those agreements, that's certainly a way to go as well. But definitely having either multiple agreements in that case or just setting some of those additions to expire can certainly be a way to handle that as well. All right, so just a follow-up question there. It looks like, do we think adding configurations instead of agreements are a better way to handle that? So configurations are certainly an excellent way to handle some of those products that you are going to be managing over that lifespan. Configurations are just a great way to kind of keep all those items bundled up. It's sort of a bundle of information, if you will. In that case, you can certainly set that there. The advantage with configurations too is there's so many ways to tie service records to them as well as workflow rules. But if you're looking to build products on sort of a reoccurring basis, our suggestion is typically to keep those on the agreement there.
Right.
All right, well, thank you everyone so much for joining us. That looks like all the questions we received. Hopefully everyone has an excellent day, and thank you again for your time.